Governor, you're welcome. Members of BoU senior management present, you're also welcome. Representing the various media houses, I'd like to welcome you all to this briefing of the monetary policy statement for the month of October 2019. Following our usual practice, the Governor will read the statement, then he'll take a few questions from the media, after which the Governor will leave us, and then we'll continue the question and answer sessions, again taking questions from the media with Dr. Mubume, Executive Director Research, as the chairperson. To point out that there will be an opportunity to translate the statement into a local language. So those media houses that are interested in that session are free to stay behind and participate in that session.
Thank you very much. This is the monetary policy statement 2019. The Bank of Uganda has in the October 2019 Monetary Policy Committee meeting, which was held this morning, decided to reduce the central bank rate, CBR, by 1 percentage point to 9% in response to the expected path of macroeconomic indicators and the international economic environment. The economy continues to grow, but at a slowing rate. Economic activity has slackened in the first half of 2019 compared to the second half of 2018. Indeed, the recently released quarterly GDP estimates by Uganda Bureau of Statistics, UBOS, indicate that GDP growth slowed down in the second half of financial year 2018-2019. In addition, the Bank of Uganda High Frequency Indicator of Economic Activity, which is called the Composite Index of Economic Activity, CIEA, points to a moderation of economic activity in the first quarter of fiscal year 2019-2020. Outlook is uncertain, particularly as a result of the unfavorable global economy. Moreover, a combination of widening fiscal and current account deficits, coupled with public sector domestic financing needs, could exert pressure on the lending interest rates, leading to further moderation. The Consumer Price Index data, CPI, for September 2019, released by UBOS, indicates that inflation remained subdued. Annual headline and core inflation declined to 1.9% and 2.5% respectively, from 2.1 and 2.7% in August 2019. The decline in inflation was in part driven by a relatively stronger shilling, moderation in domestic demand, and lower food prices. Food crops inflation declined from minus 1.4% in August 2019 to minus 3% in September 2019. However, energy, fuel, and utilities inflation rose to 2.5% in September 2019 from 1% in August 2019. Has been revised downwards compared to August 2019 round of forecasts. Annual core inflation is now projected to remain below the 5% target until the fourth quarter of 2020. The risks to the inflation outlook in the near term of 20 months ahead are assessed to be largely on the downside, and inflation is forecast to converge to the target of 5% in the medium term. That's 2 to 3 years. Demand side pressures remain subdued. In the absence of shocks, the relative stability of the exchange rate is expected to continue. The Bank of Uganda believes that the benign inflation outlook provides room for a reduction in the policy rate to support economic growth. The economy still has spare capacity, and lower interest rates will help reduce the output gap. Against this backdrop, the Bank of Uganda has decided to reduce the CBR by 100 basis points to 9%. The band on the CBR will remain at plus or minus 3% percentage points, and the margin on CBR, the margin on the rediscount rate and the bank rate will remain at 4 and 5 percentage points respectively on the CBR. Consequently, the rediscount rate and the bank rate have been set at 13% and 14%. Going forward, the Bank of Uganda will continue to monitor emerging price and output developments in order to ensure that monetary policy decisions remain consistent with price stability while being supportive of sustained non-inflationary economic growth over the medium term. Here ends the October monetary policy statement of the Bank of Uganda.